Set, go.
All right. All right, guys. 3, 2, 1.
Hello, everybody. This is Michael DeGioia with the #1 Best Trader Competition and Dash Trader doing our winner announcement and market recap and analysis for winter 2020. As always, I'm joined here by my co-host, Jill Malandrino, Global Markets Reporter with Nasdaq. Jill, how are you?
Doing great. I cannot believe that this is our last one of the year. We've plowed through these.
I know we've plowed through them. We've made some amazing, some amazing mentions over the course of the year, and certainly it's always good to finish off our week. And this time, we're not only finishing off the week, but this is our last show of the year because next time we join you, it'll be January 8th of 2021, and we'll be done with 2020. What an interesting year it's been, to say the least. So speaking of interesting years, we have the government shutdown looming as the stimulus remains incomplete. What are your thoughts on that? Are we going to get it done, or are we going to wait to the last and kick the can down the road as usual?
I just can't wrap my head around what some people are going to have to go through if the stimulus deal doesn't go through. It's not even just about keeping the economy pumping and being able to justify stock valuations and so forth, but people are going to have to go through this winter not knowing how they're going to put food on the table. And that is unconscionable to me that this is happening in the United States. So I don't even have any words for it. It's graceful.
It really is almost incomprehensible that the United States is as stuck in I hate to use this word from the kind of Vietnam era, a quagmire. It's like a quagmire of politics and indecision. The government seems to be funded on an ad hoc basis, and there has been no comprehensive stimulus that can be agreed upon by the two warring factions in Congress. I mean, we know that we had made some progress. People were looking forward to potentially a $600 stimulus check, as well as continuation of emergency benefits, but it doesn't seem like that's getting done at the moment. So we'll just continue to hold our breath, as the old expression goes. And certainly this has been a holiday season like never before. I was in the mall. I was in the Freehold Mall where you used to work. Was that really true?
I grew up in Howell, New Jersey, but I went to high school in Freehold Township. So I worked there in high school at World Foot Locker, which was outside of Nordstrom, which was our anchor, and it was the first World Foot Locker that they ever introduced, and it was the coolest freaking job like any teenager could ever have. It was amazing.
Yep.
We had like all the signed memorabilia, and they had like athletes and stuff come in to kick it open. It was pretty cool.
Yeah, well, Freehold wasn't looking too lively when I was there. It was like...
this is also like 25 years ago when everybody went to the mall.
Everybody went. I tell you something, like mall culture is just not what it used to be. I was at the Freehold Mall last weekend. We were walking around as they don't take reservations anymore. There's no indoor dining in New York City. So I had to take my kids to the Freehold Mall to go to P.F. Chang's. They won't take reservations. So you get there and they put you on, like they give you a beep, they take your cell phone number and you wander around the mall. But I would say 50% of the stores were closed. And then what wasn't closed, they had long lines and, you had to wait to get in and put your name and information down. But it was certainly a different experience going to the mall. So definitely a holiday season like never before. And by the way, the malls did not have a lot of product in them, meaning that if you were looking for something specific, they were very understocked, which also makes it unattractive to go shop at the malls. It's better to shop online if the stores don't even have a lot of inventory. Tesla is finally being added to the S&P index. So we mentioned this long ago. Any thoughts on that?
Well, it's interesting. I did a piece on this with one of our index specialists this afternoon, and the Nasdaq 100 has included Tesla in it since 2013, and the return on Tesla since then has been 2,500%. This year alone, it's been about, I think, 633% or something like that. So I would imagine the folks at S&P wish that they would have had it in their index prior to, because it's had such a substantial run. Our methodology is a little bit different. It's an actual standard. We have a standardization with our methodology. We don't have a committee that determines what comes in and what doesn't. It's a very concrete methodology that we have. So part of that is why the Nasdaq 100 has outperformed as much as it has, because of the significant weighting that Tesla has. But a lot of the move has taken place. People are anticipating that managers are going to have to put Tesla in their portfolios because if they track the index. So it'll be interesting to see what that looks like going forward. But I would imagine a lot of that money has already been allocated towards Tesla. I would even, argue on the retail side as well in anticipation of this. So I'm curious to see where it will trade from there once it opens up on Monday.
Yeah, I mean, there's some people are saying that potentially, this is like, buy the rumor, sell the news. Like the trade may have already petered out, but obviously, who knows? We'll see how it goes on Monday. Certainly, I think that there's going to be a ton of institutions that just have to buy it and hadn't bought it already.
Right. And then you also have the electric vehicle trend, which is so huge right now. I mean, anything that's attached to green energy alternatives, renewables, EV, the semis that go into this kind of technology. So this isn't going away.
No.
No.
And NEO is one of the stocks that was popping up on the radar as a stock that was constant. It's kind of the Tesla of China. And that was popping up on our most actively traded list from the #1 best trader competition very frequently. So on that note, let's jump right into our indices and talk a little bit about the charts. So talking about the charts for this week, we've gotten this tremendous, this is just a historic run straight up. I've been trading a long time. Certainly the sell-off related to the pandemic was big, but the rally after the pandemic was even bigger. The Nasdaq is at all-time highs and certainly running out of steam in terms of volume. But we've said that a few times, and certainly this end of the year, we're ending near the highs. There's only 2 weeks left, and yes, we could come off the highs a little bit, and certainly we did come off the highs a little bit today. Today was a little bit of a down day. But for the most part, from an annual perspective, this has been a tremendous year for the Nasdaq and the QQQ specifically.
Yeah, I actually want to give you guys a heads up. You love it when I give you tickers that you should be watching, but Invesco, as part of their innovation suite, recently launched what's called QQQJ. And that's basically the triple Qs, the juniors, the ones that have not made it into the index yet. And of course, they were part of the Nasdaq 100 reconstitution today. So there have been some new members that have been added. So if you are concerned about, okay, the same, 5 to 10 names are the ones that move the Qs, and you're looking to get, you're looking for the next gen of that, QQQJ is something that you definitely want to take a look at. And there's also another one called the QQQM, as in Michael, which is another one that has...
I won't forget that one.
Yeah, so those are two, if you want to look at the next generation of the Qs and allocate some resources there, that's a great place to look. And the thing is, those particular funds have more of the exposure to the EV, the renewables, the alternative kind of stuff. And that's really where I think it could be good to see a lot of outperformance there in the longer term. So I would definitely take a look at those too.
Great. No, definitely. I'll put those up on one of our upcoming list of stocks for us to take a look at here during the analysis. So let's take a quick look at the SPY. The SPY kind of came off its highs, very strong, new high and rally after the pandemic sell-off. And then here we have a double top drop today. We made a new high, shallow new high, and then drop. I believe that a lot of the selling today was related to the fact that the government is looming, the shutdown is looming, there's still no stimulus. We kind of rose over the last 3 days on the hopes of a stimulus package that didn't come. The Dow certainly, is in the same boat. It's kind of has this long ascending wedge formation with a little bit of a sell-off today. And then, certainly it made a new high, a new post-pandemic high. And it really had a decent year considering all the craziness of 2020. Gold, like we had mentioned in the monthly newsletter, Gold rallied off of the 50-period moving average. It formed a really strong bull pennant formation and a bull flag formation. It's back up to the top of its downtrend line, which if it breaks the trend line could take us up to those prior highs. And there's two prior highs to speak of. I think one is at that 185 and then the other is at 195. But certainly those would be the areas to keep an eye on if it breaks this kind of downtrend line. And I think that the thing that everybody has been watching is this kind of tremendous, almost stellar run of Bitcoin. And what I have here is the GBTC, which is the tracking ETF, one of the tracking or the most popular tracking ETF. I think it's Grayscale tracking ETF of Bitcoin. So you certainly have been following Bitcoin, Jill. So what are your thoughts in Bitcoin going forward and this tremendous run and this break of 20,000, which is a historic break for the cryptocurrency?
Yeah, it definitely is a historic break. In fact, Grayscale is going to be on my show on Monday, and they come on like once a month, once a quarter, and they're always on point. And just the level of institutional adoption this year is quite astounding. So when we think about stocks, we always talk about, is it like 1999? That's what we compare an overvalued market to. So the question is, when you look at Bitcoin, is it comparable to 2017 when it had that massive run and then, it fell off a cliff? And the resounding answer is no. And it is different this time. And I know that's a cliche, but it definitely is. You can see by the level of participation and who's participating. In 2017, it was more of a retail trade. It was more crowd type of trade. This is completely institutional driven. We've spoken about Square. We've spoken about PayPal. Announced last week with Mass Mutual. This is a major insurance company that acquired $100 million worth of Bitcoin into its reserves to create that diversification and have some alternative exposure. So I think that's really what the difference is. And of course, with Bitcoin, there's a limited amount to it. And these institutional investors are going to hold it longer term if it's part of their portfolio and part of their investment mandate. So I think it's interesting. I was looking at my buys earlier this year. I'm what they call a hodler, and I'm very proud of that. I haven't touched mine. And, my last buy was somewhere in like this 6,000 level, although I did add some at 17 once we got some of those announcements in, I think it was November 27th was my last ad. So I'm good with that. And I just think, I'm a big believer in DeFi. I'm a big believer in cryptocurrency and what it can do to help providing access to banking and wealth transfer around the world, especially in these newer economies like in LATAM, like in Africa. So I think this is here to stay.
Yes, I totally agree. I think that now if you see insurance companies, starting to adopt it, insurance companies have to be more conservative. They have to be buy and hold, by the nature of why they're trying to take some risk off and make sure that they have some long-term investment. So that's real solid, deep, long-term institutional investment. And I do certainly think that as far as Ethereum goes, that has some real disruptive technology for the financial sector, but certainly could be new finance. And you can see that here's Grayscale's Ethereum tracker. They actually, people were like, why is this go crazy like this? It's because I think it had a 5-to-1 stock split, meaning that they issued, so it went from the hundreds down to like $20 today. So I think that everybody who had one share got 5 shares, and this one is related to Ethereum, but it has certainly tracked the tremendous run up on Ethereum. Ethereum sitting somewhere in the 600s, and Ethereum in the 2017 run up got up to $1,500. Somewhere in that area of $1,600. So Ethereum still has quite a ways up, whereas Bitcoin kind of hit its prior high. Ethereum hasn't even gotten close to its prior high of $1,500. It's sitting there around 600, 700. And I know they just came out with Ethereum 2.0, which is also some of the hype related to that. But certainly Ethereum and ETHE, the Grayscale tracking stock, is one to keep an eye on, especially now that they've just had this stock split. And in other news, Google got hit with yet another antitrust suit And, in looking at this chart, it's starting to take the stock down. So the first antitrust suit didn't really have too much effect on the stock. The stock kind of quickly rebounded. So there was the first antitrust suit. And then here was the big rally after the antitrust suit, or kind of rallied along with the market. And then this was the latest antitrust suit, which kind of put in this little head and shoulders formation. But certainly big tech is getting put to the crucible a little bit with all these antitrust litigation. What are your thoughts going forward? I know that I found out what that section was that we were talking about last week. It was Section 230, which is the rule that says that internet service providers and various internet platforms like Facebook that have user-created content are not covered by the same rules, the editorial rules, that are covered by some other types of media, and although they are acting like other types of media. So that is, if that gets taken away, Section 230 gets taken away, that would have a very, very big impact on something like Facebook or Twitter. Probably not so much on Google, except for on YouTube. YouTube is probably the only spot that, Google has kind of been censoring and acting like an editor that I know of anyway. But certainly I'd like to hear your thoughts about the ongoing litigation on big tech, and certainly this Section 230 that I've been hearing a lot about. Yeah,
it is so interesting because, do you want a social media platform editorializing your content? That's kind of why it's there, so that you, the media distribution is a little bit more democratized. I definitely agree that something has to be figured out to find, a medium there. And I think part of it is, when it comes to regulation and the legal side of it, is that the technology and the production aspects of it is light years ahead. It just operates at a much faster speed. So it's impossible for regulators to keep up. And then you also have the cybersecurity threats that come into it as well. So it'll be interesting to see how this plays out. And it's going to take a long time. I don't think this is something that you're going to see an immediate solution to. It's not even just the technology or the media side of it. It's a big philosophical question as well that needs to be answered. When it comes to legislation, we can't even get stimulus bills passed. So this is going to take some time once you have, government attorneys up against these behemoths that I'm sure employ the top talent around the world. What I think is more interesting, and I can't comment on directly because, of course, they're Nasdaq heavyweights, but what's going on with Apple and Facebook, that kind of came out of nowhere. But again, it doesn't seem as if it has adversely impacted the stock price that much. Granted, these big Nasdaq 100 names really haven't done much since the end of November. They certainly have taken a breather. It really didn't impact it to the extent I thought it may have, but it's interesting to see these two heavyweights sparring with each other.
Well, if you look at Facebook's chart, Facebook's chart does not look good. This pattern is a clear consolidation, and it's making consecutively lower highs, right? So it's made lower high, lower high, lower high. This is Facebook specifically. And, it certainly has lost that kind of locomotive-like engine where it had just been kind of charging up. And since this, this kind of, I guess really since Zuckerberg was there and sat for the hearing through Congress, it really has not gone anywhere. And I don't know if that's going to continue, but like you said, usually legal battles take 2 to 3 years to kind of play out. And all you have hanging over your head is an announcement that can gap the stock down 6 points. Very rarely are you going to get a legal announcement that's going to gap the stock up 6 points unless they suddenly win or the case gets withdrawn, which very rarely happens. So generally, this is like a black cloud hanging over these stocks. Now, I was a little surprised, and I don't really know all the details about the Facebook and Apple sparring, but certainly it's kind of an interesting development. It kind of took me a little blindsided by it. I was a little surprised by it.
Yeah, I think it's kind of it's just so unusual to have them, you're always going to have to deal with the government, right? That's always going to be there. But when you have a significant peer in the industry come at you also, that's interesting. Also, the thing is with Facebook, I heard about it this morning where they're looking to separate the CEO and chairman role with Zuckerberg. I don't remember the name of the activist that was on the show, but that's another thing that's been out, and that's nothing new. But that was making the rounds this morning as well, looking to separate that role a bit.
Yep, absolutely. So let's jump to our competition overview. So our competition ended today. This is the last competition of the year. The competition for this is the competition week, final week from December 14th to December 18th. We have our top traders, which this 2020 is the most unusual year in any of our recollection at the end. And it would just be appropriate that the last trading competition for 2020 is the most unusual trading competition in my recollection. We have a race to win the competition by traders who lost the least. Okay. This is like the opposite. It's like the inverse of our normal trading competition. Who's made the most money during the competition? This particular competition gets won by whoever lost the least. And in this case, it was Best Trader 513 from the Global Balsa Group. And they only lost $1,591 during the course of the competition, the 2-week competition. Then we have Best 510, which is a Dash trader that came in directly from Dash. They had a really good day, making $1,000 today, but they could not make up the distance, which is they are down 6,000 the overall competition. And then we have Best 523 from the Global Balsa Group, down $6,000 on the overall competition. And then we also have our 2 honorable mentions as well, also all negative. So very, very different competition these last 2 weeks, where traders kind of were battling to see who lost the least. What are your thoughts on that, Joe?
Well, I'm curious to see what they traded and how they traded it. Again, there's no Micron.
Yeah, this is this again. It seems like this time there is NEO, which I had mentioned earlier. Which is probably the only stock that I recognize. It's a lot of these pop and drop stocks. The only one that I recognize is obviously NEO and Baidu.
Peloton.
Peloton is on there. But these are mainly stocks that kind of, Myrna, obviously. So we got, but I mean, these are the 1, 2, 3, 4 stocks that I really recognize. And I think that part of the problem is that I think people were taking a lot of shots. And if you look at a stock like MREO, which is Mereo Pharmaceutical, right? That was one of the most active stocks today. A lot of shares traded, kind of a low price stock. It's kind of hard to trade these stocks that just pop up for one day and then they kind of implode on themselves. So I think that trading style of trading these one-day wonders, these pop and drop stocks, it's a much more volatile and kind of lottery. I would call these biotech stocks, these biotech lotteries. You might catch them the right way, but they also might fall back in your face and burn you, right?
Wasn't there an IPO that came out earlier this week? It was like $5-6, and then it skyrocketed to 90. There was a couple of them that were weird.
There's been a lot of crazy IPOs as well, for sure, and certainly there's been SPACs that have been moving all over the place. This was another one. This was Mara, MARA. Has been running for the last week, which is why it was on the most active. But that was a pretty smooth trending stock, so certainly a little bit more likely to be traded in a more conservative way. And then of course NEO, which is rallying up as well. Which NEO is the Tesla of China. So I think that what I can take away from this is that probably trading the more consistent names, the Microns of the world, the AMDs, having a very stable universe of stocks instead of always trading these one-hit, one-day wonders, probably is a more consistent, professional, and profitable approach to trading than jumping around from these kind of one-day wonder stocks that are just on the radar for the day and they can fall back in your face and disappear the next day. And I certainly saw a lot of that in this trading competition, where people have kind of traded things that I've never seen before, and certainly not the usual cadre of stocks that we're used to. So on that note, let's jump right ahead. Congratulations to our winners, okay? The Winter Expert Competition. From everybody here at Dash Trader, we'd like to congratulate our winners and thank to all of our competitors for making this a great competition. I believe that we're going to be adding some additional honorable mentions in upcoming competitions, like the most consistently profitable trader, the most consistent trader. So we're going to be looking for prizes and to commend people on the most realistic trading records, things that are a little bit different from the norm. I certainly think that that's a good idea, and we'll be working that into the competition in the future. We'll have some additional information on that going forward. So you could certainly follow us on social media, Number One Best Trader, on Facebook, Instagram, and Twitter. And certainly you can follow us on YouTube, LinkedIn, and again, the usuals. And I want to wish everybody a wonderful, wonderful holiday season and a happy new year. And most especially to my co-host, Jill, great working with you all this year. Have a wonderful, wonderful and Merry Christmas and Happy Holidays.
Thank you.
And a wonderful new year. Be well and see you all in 2021. Goodbye, 2020.
Adios.
Adios. Bye-bye. Enough already. All right. Bye-bye, everybody.
See you guys.
Ciao.